Next up, livestock grazing currently utilizes approximately 35% of the total land in the continental U.S. While beef cows usually run on cost-effective nutrient-rich forage such as grass and crop residue, this year it seems forage production is at risk from drought. Market Journal's Bill Dodd spoke with UNL livestock marketing specialist Elliott about why the forage conditions and higher feed costs are causing some producers to consider herd liquidation.
With worsening drought conditions in the U.S., it's important to understand how different regions in the United States vary in terms of their grazing land, as well as their total beef cow populations. With one of the largest swaths of our country's best grazing land facing continuing drought conditions, the implications of partial herd liquidation are becoming increasingly realistic.
About 50% of all the forage and pasture range is actually located in the mountain regions. Different regions such as the northern plains, we have about 15% of all the grazed forage and pasture conditions. And the reason why we generally monitor this is because of two reasons. First, drought implications obviously are a concern. The more drought-affected areas are affected by larger grazing densities, then that's obviously a concern. And second is the USDA reports that come out that monitor grazing and pasture land. They report it by region and also nationally. Over the last couple of weeks, we've seen extremely elevated pasture that's been rated as poor or very poor. And then when you dig down into it, it's because of places such as the mountainous regions and parts of the northern plains that are experiencing large amounts of drought. And that's one of the reasons why they're so elevated.
When it comes to drought and possible herd liquidation, Elliott tells me there are likely implications for both the cull cow market and the feeder cattle market.
Cull cow markets tend to be pretty geographically isolated, which would mean that cull cow culling rates in New Mexico are not really going to affect cull cow rates in Nebraska. So we're not likely to see large impacts for Nebraska cull prices given people's preferences outside of Nebraska for culling. Feeder cattle is a little bit different because there tends to be the theory in economics, what we call the law of one price, which basically suggests that prices should be equal throughout different geographic regions minus transportation costs. So if I could buy an animal in Nebraska and ship it to Kansas, that price differential minus transportation should be equal to zero. If not, we would expect that people would buy animals in Nebraska and ship them and continue to ship them to Kansas. And so it's two implications. First is that feedlots, if there is a partial herd liquidation, feedlots are likely to be able to buy feeder cattle a lot cheaper from drought-affected regions, which would affect their demand for other types of feeder cattle, such as feeder cattle coming out of Missouri or even locally here in Nebraska and as far as potentially Florida. And so it really kind of shapes up into a potentially worse condition given that we have elevated feed prices, which means feedlots are not going to be wanting to place feeder cattle anyways. And so we could see a lot of downward pressure on feeder cattle prices as we move into the really into late summer, early fall.
With the possibility of partial herd liquidation hitting harder hit areas of drought, Elliott had some risk management suggestions for those who may be facing the brunt of any financial burdens brought on from drought conditions.
The first is pasture range and forage insurance, which essentially is a subsidized insurance, and what they pay for you is basically rainfall, or precipitation, I should say, which would be rain plus snow. And that is trying to proxy for, well, if you don't get rain, you can't have forage. And what we've seen is that it actually pays out quite aggressively. For every $1 that a producer pays in premiums, it tends to return more than $1 back in indemnity payments. And this is, of course, on average, and different regions will vary. But that provides producers an opportunity to protect forage production. And so in the context of drought, one reason why we might not see herd liquidation is that producers could take the premium or the indemnity payments that they're receiving from pasture range and forage insurance and taking that money to buy additional feed for their animals. And so they're actually able to just transfer payments to retain beef cows. The second would be LRP, which is livestock risk protection, which is essentially it functions as a floor for a price floor. It guarantees a certain price to the producer. And that prevents from, we don't really know what the drought is going to do. We don't know what feed prices are going to do in the future. And really, frankly, we don't even know what the COVID-19 situation is going to be like going into the fall. A lot of uncertainty. And what livestock risk protection does is it puts a minimum price that the producer will receive for their animals. And that provides producers an opportunity to continue to try to maintain profitability moving into the future.
With the long, hot months of summer still to come, now is the right time to be thinking of how to navigate any potential drought-related challenges. Reporting for Market Journal, I'm Bill Dodd.